Welcome, everyone. We are live with another episode of Level Up Law, where every Tuesday at noon, South Carolina Legal Services levels up your legal knowledge about an area of law that we practice in. And I'm delighted today to bring you an episode on tax implications for non-traditional income. So if you're one of those folks that's getting paid under the table or off the books or whatever you might call it, you're going to be interested in this topic. Hello, everyone. I'm Susan Engel, Senior Staff Attorney and host of Level Up Law. And as always, our producer, Kenneth Elliott, from our IT department here at South Carolina Legal Services, is here making sure that everything is running properly for us today. And that's always very important. So today, I'd like to introduce Attorney Brad Meadows from our office up here in Greenville, South Carolina. Brad is going to discuss these tax implications for non-traditional income. Brad is one of the attorneys with our low-income taxpayer clinic here at South Carolina Legal Services. So he's ready to give you all the warnings and concerns that you should be thinking about if you are a person whose income is not the traditional wages, paycheck kind of income. But before we do that, I do always want to remind you that this is not legal advice, just general information for the public, but it is important information. So we hope that it will be of value to you if you're live with us today, or if you're just on the replay on our YouTube channel. And Kenneth will upload the recording of this episode on our YouTube channel, usually within about 24 hours. Now, if you need the help of a lawyer, you can call our intake line here at South Carolina Legal Services, or you can apply online, and we'll provide all of those details for you at the end of today's presentation, along with our social media handles, so you can check all of that out. I do want everyone to notice the QR code on your screen. You can scan that QR code and sign up to get our newsletter or to receive future emails about upcoming episodes of Level Up Law and other important information from South Carolina Legal Services. One last note, for today, Brad can answer general questions if we have time at the conclusion of today's presentation. So if you do have a question, you can just put it there in the question box that should be showing on your screen. So with that, Brad, let's go ahead and get started.
Thank you very much, Susie. I appreciate that introduction, and I'm glad to be here today to talk about some of these topics. Today we're going to talk about some tax implications of non-traditional income and what some of those topics are and what that might mean. Susie just went over the disclaimer. So this is not to be considered as legal advice, nor is it to be considered any kind of representation. Certainly, if you have any legal issues, tax related or not, you should seek the counsel of a licensed attorney. I wanted to start off with what's sort of the general rule for income, with respect to the IRS. This is a basic one sentence. All income is taxable unless it's specifically excluded by law. So that's kind of a broad way to kind of look at it. Think of income that you get, it's probably going to be taxable, but it may not be if there's a certain exclusion in the IRS code or some other law. So I wanted to start off with just a couple of examples of what might be types of income that are not considered taxable by the IRS. Now, keep in mind that this is just a few that I picked out, and there are several other examples. I tried to pick out certain topics for this presentation that might be more common for our typical client base, low-income community, middle-class families, and things like that. So as you can imagine, the IRS code is voluminous, but I just wanted to pick out a few of the common topics to talk about today. So I want to start talk very briefly about a couple issues of non-taxable income, or instances of non-taxable income. So inheritances, gifts, and bequests. So in most cases, property that you receive as a gift or a bequest or as an inheritance will not be needed to be included in your income. However, it's important to point out that if you receive property or if you receive any kind of gift or inheritance that is going to create income in the future, then such as interest or dividends or rents, then that income may be taxable. And inherited pensions or IRAs, you may be required to include some of this income on your tax. Alimony. Now, alimony, I wanted to put this in here because wanted to talk about kind of the change that happened in 2019. This is, alimony. I practice some family law, so this is a common issue in parties that get divorced. The definition is a payment to or for a spouse or former spouse under a divorce or separation agreement or court order. Now, if the payments under a divorce or separation agreement were executed after 2018, or number two, before 2018, but it was modified after 2018, then if the modification expressly states that the alimony isn't deductible to the paying party or includable to the receiving party. What that basically means is any kind of divorce or separation agreement executed after 2019 is not includable as income or deductible by the paying spouse or former spouse. So that was really the main point I wanted to make about it. And child support is not includable as taxable income, the policy being that that's money that should be used to raise a child or children and shouldn't be included as income that is taxable. Now, again, this is a very small selection of topics that are what I might consider non-traditional income. In other words, not typical wages where an employee works for a company and gets paid a salary and gets issued a W-2 at the beginning of every year. So these are just some, again, this is not an exhaustive list. This is a short list of some of the topics that I wanted to talk about during this presentation today. So let's go ahead and get started. The first one, I picked this one because there's going to be some changes. We're in the process of, the IRS is in the process of enforcing a law that was passed in 2021 with regard to 1099K income. And I'll talk about all the details and what those changes mean as we go through here. But I wanted to touch on this one because it might affect a lot of people in the next few years. So who issues a 1099K form? These are your payment card companies, payment apps that people often use, and we'll go over some common ones. Online marketplaces, Etsy and eBay are two examples of those that a lot of people like to use to sell goods. Now, who gets issued a 1099K? If you take a direct payment by a credit or a bank card for selling goods or providing services, typically online. If you use the payment app, and we'll talk about what those are, some common ones here, or an online marketplace, and you received over $20,000 in payment from over 200 transactions. Now, I want to point out that was I want to call it the old law because right now it's going through a transition, and the IRS is phasing in this new law from 2021 from the American Rescue Act. So this is about the change. So the American Rescue Act in 2021 amended the threshold that required what are called third-party settlement organizations. And these are people who take money from one person who is buying a good or a service and then sending it to somebody else who is selling the good or the service. So the threshold used to be $20,000, and at least 200 transactions during a calendar year. The American Rescue Act amended that threshold and lowered it all the way down to $600, which is, as you might imagine, is a pretty significant decrease. So what that means is if you use these payment apps or if you sell goods or services on online marketplaces, if you receive payment for goods and services more than $600 throughout the year, then you may be issued or should be issued a 1099-K. So as you can imagine, lowering that threshold so much, the IRS was concerned that this was going to be a big problem, and not just for people receiving 1099-Ks who didn't normally receive them, by third-party settlement organizations having to issue a whole lot more, possibly millions more 1099-Ks, and the IRS administrating the new rule for this threshold. So what the IRS did is they suspended enforcement of this amendment for 2023. And in 2024, they've lowered the threshold to $5,000. So for this tax year, the IRS is only going to require these 1099-Ks to be issued to somebody who received at least $5,000 in payments through these third-party settlement organizations. Now, the IRS has not yet stated how it's going to handle this in 2025 next year, but I believe it may go ahead and start enforcing the law as it's written with the threshold all the way down to $600. But we'll wait and see what the IRS decides. Some common third-party settlement organizations, and these are ones that a lot of people use day in and day out: PayPal, Venmo, and Cash App. Etsy and eBay are very popular online marketplaces for people to sell their goods and services to other people who are online marketplace. So just some common ones to think about. Now, there are some exceptions. I'm sure a lot of you were thinking, well, wait a minute, what if I just Venmo my nephew a birthday present, some money through Venmo for like a birthday present or a Christmas present. Now, there are some exceptions. So one is personal transactions such as birthday or holiday gifts. If you share the cost of a ride or a meal with somebody else, that should not be included as far as going towards that threshold. And paying a family member or another person for a household bill. These are all transactions that should not count towards that, the new threshold. However, just do keep in mind that the casual sale of goods such as used clothes or furniture or any kind of other household items you could start going up towards that threshold. And again, if you go past the $5,000 threshold for 2024, then you are likely to be issued a 1099-K. Now I want to talk about sharing or the gig economy and tip income. So income, what we're talking about here is income from if you work in the what's called the quote unquote gig economy or a service industry, where oftentimes people will get cash tips for providing services to the customer. So gig economy earnings, these are activities where people earn income providing on-demand work, services, or goods. So think of this as you're selling goods online, or you are driving a car for ride sharing, such as Uber or Lyft. You're driving a car for deliveries. A lot of people use apps to get the groceries delivered to their home. Some people use it to rent out properties, be able to handle those transactions through an app or a website. So, like I said, income is often received through the app or a website. Everything's handled right there on your phone, and transactions are made. So the IRS has a great website that has a lot of information about how the gig economy or how activities in the gig economy are taxed. taxed. And I've included the link here in the slide in case if that's something that applies to you. It's certainly worth checking. All right, reporting service industry tips. People working in the service industry, I think we all know what that is. If you work as a server in a restaurant, or work at a hotel or a salon or someplace like that, often receive cash tips for providing services to the customer. Now, generally, this is taxable income. Now, employees are required to report their cash tips to their employer so that their employer then can include those in the W-2 that is issued to the employee at the beginning of every year. Now, not all the tips were reported to the employer. Just keep in mind that anything that was not reported tip-wise on the W-2 should still be included on the tax return as reported. Now let's talk about the 1099-C, or the cancellation of debt. I wanted to point this out because a lot of people maybe don't know a lot about what a 1099-C is or what a cancellation of debt is, but sometimes it can be a harsh surprise. So generally, if a person owes somebody or a debt to someone else, and then that debt gets canceled or forgiven for less than what the full amount was, then whatever that amount was canceled is considered income and is required to be reported. There are some exclusions. I want to talk about those, but before I do that, I want to talk about kind of a popular, or not a popular, but a common scenario. So sometimes maybe somebody applies for a credit card, and they use their credit card and they make payments, and then something happens and they just aren't able to continue those payments. Maybe they move and they're just unable to make those payments. Well, sometimes credit card companies, they'll try collection efforts to get that person to keep making payments on the credit card debt. But sometimes they're like, it's been so long, we're just going to write it off of our books and issue a 1099-C, and then out of nowhere, somebody gets issued this person who applied for this card and used it and has that debt. They get this 1099-C that debt has been canceled. Well, the amount that's on that 1099-C is considered income on their tax returns. Now, there are some exclusions. There's actually a bunch of exclusions, but I just picked out three common ones that I wanted to talk about. In bankruptcy, somebody files for bankruptcy and they get their debts discharged, then that debt was canceled in the bankruptcy and is not required to be reported as income. Insolvency. So if the taxpayer was insolvent immediately before the cancellation of the debt, then they can argue that debt should not be included as income. So what insolvency means is, and the IRS has a worksheet that a taxpayer can use, and basically, in general, right before the debt was canceled, you add up all your assets and you add up all your liabilities, and if your liabilities at that moment right before the debt was canceled is higher than your assets, then you can get that cancellation of debt income excluded. And also if the debt was canceled with regard to a primary residence. Social Security income. So Social Security income may be taxable income, but that depends on some other factors. In this presentation today, it's a little bit outside the scope to go into all the factors, all the details. It really just, there are a lot of different scenarios where it could be taxable, not be taxable. But for the purposes of this, I just wanted to mention that it very well could be taxable. You'd have to look at what the taxpayer's filing status is and how much, if any, other income that they received to be able to calculate how much of that Social Security income could be taxable. I did want to note that SSI or supplemental security income benefits and also lump sum death benefits, which are a one-time payment to a spouse and children of a deceased person, are not subject to federal income. Self-employment income. I wanted to talk very briefly about this, mostly just to give some tips, but this is also another big topic that we could talk about all day, and all the different variations of self-employment tax and what in income, because there's so many different variations of how people who are self-employed earn money. So the definition, income that arises from the performance of a personal services, but that cannot be classified as wages because there is no employer or employee relationship. So that's just the basic definition. Self-employment income is taxable. And additionally, self-employment income is subject to the self-employment tax. Now, the self-employment tax is a lot like FICA, tax on wage earners' income, and this includes Social Security and Medicare and Medicaid tax. Now, I did want to point out some tips that for people, for our listeners out there who are earning self-employment income. I recommend that you don't commingle any kind of any payments or income or expenses. So it's always good to get maybe go to a bank and get a separate bank account, business account, so that all your income from your work and all your expenses are coming in and out of that bank, in and out of that one account. And how that's helpful is if the IRS ever comes to audit your reporting of your self-employment income, then it will be very easy for you to gather the necessary documents to show what your income was and what your expenses were. The IRS sometimes will reject self-employment income if they don't have enough supporting information about it, and you see this a lot in the earned income tax credit. The EITC is the most the tax credit that is audited the most by the IRS, unfortunately. And then I pointed out under the table payments are legal, and income from under the table payments need to be reported on your tax return. All right, unemployment compensation. Generally, you must report the income of all unemployment compensation you receive throughout the tax year. You typically are issued a 1099-G, which has the amount of compensation, the payments that the total amount of payments that you receive. If there was any tax withheld, it will also be on that 1099. Income tax withheld from your unemployment compensation. You'll need to complete the W-4B and provide it to the office that is providing your payment. Typically, the tax withheld will be 10% of the payments that you receive, but you can withhold more if you choose to do so. Gambling winnings. Gambling winnings are considered income, should be included on your tax return. You'll use Schedule 1 for the Form 1040 to declare that income. And you can deduct gambling losses that you had during the year that you had losses in your attempt to get gambling winnings. Just know that the deductions can't be more than the total amount that you won for that year. And some common examples of gambling winnings are winnings from a fantasy sports league, or winnings from lotteries and raffles. And you'll typically receive the Form W-2G for those types of things. And finally, income from illegal activities. Income derived from illegal activities, for example, money received for the sale of illegal drugs, must be included in your or is considered income and should be is taxable and should be reported on your tax return. So, not sure how many people actually do that, but just wanted to point that out that is still considered taxable income. Called the Al Capone rule. I don't know how many people know this, but to my knowledge, I don't believe Al Capone was ever incarcerated for murder or for any other violent crime or any other type of illegal activities that people usually associate with the mafia, but they got him on tax evasion, and that's how he was sent to prison. So just thought that was a unique story and wanted to add that to the list of non-traditional income sources.
That's great. That is often how they catch those criminals, or are able to put them in jail when everything is so hidden otherwise with all those other kind of crimes besides these financial ones. Well, that was so interesting, Brad. Thank you so much. There are a couple of questions.
Sure.
So let me give you those. If cash tips are taxed the same, are cash tips taxed the same whether they're on a W-2 or if they're just reported by the taxpayer on their return without receiving a W-2?
Could you repeat the question? I'm sorry, Susie.
Yeah, it's cash tips, like for, I guess for service industry and stuff like that. Are they taxed the same whether the tax return includes a W-2 for those cash tips, or if the individual is just reporting that income on their tax return without having received a W-2? Like, I guess is the tax amount or percentage?
Yeah, I believe they are taxed the same, whether or not they're reported W-2 or just included as other income on your tax return.
Okay, cool. And then the other one is just off of that slide about gambling winning. So said that that you will receive a W-2G. Is it the company that runs the fantasy league or the raffle or whatever? That's who sends you the W-2G?
Yes, it's typically whatever organization that issued the proceeds or the winnings from your gambling is the one who should be issuing that 1099-G.
Okay. Well, Brad, it looks like that's all the questions. I'll try to keep an eye there for these last couple of minutes as we close out the show. But I want to thank you so much for your presentation today. It's been very enlightening, and you tax attorney types might think that it's sort of basic stuff, but I think you've really helped a lot of people, and probably some of us at legal services, to really understand how the various forms of non-traditional income may be affecting our clients and their tax returns and the requirements that they have for reporting that income. So, very fascinating. I know that sometimes I will have a client who doesn't understand when they've applied for Social Security why they're not getting as much income as they had expected. And if they haven't been reporting that income throughout their career of non-traditional income like they should, then that's going to definitely have an effect on that. So this is really helpful information, and I really want to thank you for that. And I do also want to thank, as always, our audience, whether you're here with us live or you're on the replay. We really appreciate you being here, and hope that you will continue to join us here on Level Up Law. Now, it looks like we might have another question coming in. So let me go ahead real quickly before we close out and see if that's one we can answer, if it's a general question. Are you taxed more by being self-employed, or does it end up being the same as being employed by a company? I know that when I was in private law practice and I reported my self-employment income, as you mentioned, you have to start paying that self-employment tax on a quarterly basis, at some point. So there's definitely some rules on that self-employment. So the question is, again, are you taxed more by being self-employed, or does it end up being the same as being employed by a company?
That's a great question. My answer is it depends on so many other factors that that would need to be processed.
Oh, Brad, that's such a lawyer
Yeah,
answer, but it's definitely
I'm sorry to give that answer, but I mean, there are just so many factors that would have to be looked at before you could really sit there and determine, well, it'd be more or less than
yeah. And it
doing
does
it another way. So
definitely depends, I'm sure. I was just joking with you about that being a typical lawyer response, but that's why we have to respond that way sometimes, because it is there's often a lot of factors that go into that, and so it has to just be on a case by case basis, I guess. Well, as I mentioned earlier, we will post a recording of today's episode on our YouTube channel. So just look for the Level Up Law playlist on YouTube at SC Legal Services. And when you do go to our YouTube page, if you have not checked that subscribe button, I want you to please do that, especially if you're on the replay right now. Click that subscribe button. We always appreciate that people are watching the videos that we put out on this important information. And if you sign up for that notification bell while you're there, you'll know every time we post a new video, whether it's a Level Up Law episode or any other video resources that we share there throughout the year. Also, if you found this video to be helpful and valuable to you, and I'm sure you did, and you think it might be valuable and helpful to somebody else, definitely share the video out with anybody that you can. Now, let's go to the next slide. Do you have a topic to suggest for one of our episodes in the upcoming months? If you do, scan that QR code that is on your screen right now and let us know. We definitely want to, have our episodes be on subjects that you would like to see some information on in our upcoming episodes, not just what we think is important to put out there, but topics that you have an interest in that we might be able to provide some valuable information on. Give you a minute to scan that QR code. And now be sure to check out our social media. Not just our YouTube channel where you find all these episodes of Level Up Law, but all of our social media. We're always posting important information and links for the public there. And so just check that out. Also, you see here the different ways that you can apply for our services here at South Carolina Legal Services. Our services are free for people who are eligible, and there's certain requirements for that. If you are a low income individual or in some other special population that we can help, we have an intake office that's either online or on the telephone, and they can walk you through that intake process and figure out if you are eligible for our services. Unfortunately, we can't help everybody that applies for our services, like public defenders are required to represent everybody who is eligible from a low income standpoint. But for us, we don't have those kind of resources, and so unfortunately we can't represent everybody, so please keep that in mind. But we do make a great effort to do what we can for everybody that applies for our services. So again, check out our social media, share this presentation with others. We want as many people as possible to get the important information that we have for you folks out there. Other people may not need it, but they probably know someone who does. So please be open to sharing that. Now, be sure to scan that QR code again if you didn't scan it at the beginning, so you can always get notified of upcoming episodes of Level Up Law. And be sure to tune in next Tuesday at noon for another live episode of Level Up Law. Thanks again to Brad Meadows for a great presentation, and producer Kenneth Elliott, who's been helping us there in the background, make sure everything goes smoothly. And also, again, thank you to our viewers, whether you're live or on the replay. We appreciate you being here. Thanks again. That concludes today's webinar. Take care, everybody.